The Chinese stock markets are in total chaos in what amounts to the worst crash we've ever seen, perhaps in their entire history. Over 25% of every stock in the CSI 1000 index has had its trading halted by the Chinese authorities in an attempt to stop panic selling and stop the rout. The index as a whole fell more than 12% over the course of a single day, and this is after a disastrous start to 2024 where the index fell by 18% already this year, and on the whole the index is now down by over 40% over the course of this multi-year bear market in China. To put this all into perspective, the COVID crash in the CSI 1000 index when China shut down their economy even harder than any Western country in the world saw that same index fall by only 25%. So what the hell is going on and what can we expect to see next? Now obviously this is closely intertwined and related to Evergrande and the Chinese property bubble that has well and truly popped. Last week we got news that a court in Hong Kong had finally ordered the liquidation of Evergrande, the second largest property company in the world and the most indebted company in the world as well. But this wasn't actually surprising because Evergrande hasn't been paying any of its debts for over 2 years at this point, and the only thing stopping it from being liquidated was the stubborn Chinese Communist Party who didn't want to let their pride and glory fail. This high-profile liquidation of Evergrande essentially was just the straw that broke the camel's back and caused the rout in Chinese stocks. In reality, nothing new actually occurred with Evergrande except investors in Chinese stocks finally realizing that their investments simply aren't safe, and so they sold, and this forced markets down, which caused a panic across the country. Ultimately, all this fear and all these losses stem from the property bubble, with China currently in an incredibly deep balance sheet recession. Now, what actually is a balance sheet recession? Well, it's where households and companies choose to not target growth and expansion, spending, or taking in new credit or debt, and they instead just focus on paying off their debts, resulting in shrinking balance sheets all over the country. This is usually caused by a risk factor causing harm in some areas, which changes perspectives and causes those households and those businesses to get just a little bit scared and stop being risky and to start being more conservative. In this case, that risk factor was the property bubble finally popping. If you're a Chinese individual over the last few years, you had probably thrown your entire life savings into investment properties hoping to get rich, and suddenly the value of those investment properties are falling by 20 to 30% a year, and you still have debt on that property and there are simply no buyers. So you've gone from having a steady pension in reserve, a reliable investment, to essentially holding and relying on a white elephant overnight. Understandably then, after losing half of your net worth and most of your investments over the course of 1 to 2 years, you aren't going to be eager to take out a new car on finance or to buy the newest iPhone on a monthly payment or even to do anything with your money except stick it under your mattress. And we're also seeing the exact same thing happen with businesses in China. No one is ambitious today, with corporations simply trying to keep their heads above water and the lights on and abandoning the idea of growth altogether in an attempt to simply keep the companies alive. And this is essentially draining the money supply throughout China and causing deflation, which has been hammering their markets. The last few days of stock market chaos in China all stem from this overarching problem, which all came to a head 2 to 3 years ago when property developers started to crash, but there have been no major changes over the last week. And we're simply seeing mass psychology break out and take hold, with panic selling happening across the board. Now, the Communist Party is watching this, and frankly, they're panicking. Many people like to think that China has freer markets than most countries like the US, but in reality, whenever a market dip or shake occurs, the Communist Party tries to rush to the rescue and fix things, even though they have failed to stop the market rout over the entirety of the last 2 to 3 years. This week is no different at all, with the communists firing on all cylinders, trying to stop their markets from crashing. Right off the bat, more than 25% of every single company in the Chinese CSI 1000 index has seen their trading halted. This basically means the communists just said, you aren't allowed to buy or sell these shares anymore. If you own them and don't want to, well, tough luck, you have them. And if you're trying to invest into them and you can't, well, tough luck. The aim from the CCP with this is simply to wait until the panic stops before they unlock trading again. But how long that will take, no one knows. 2 years ago, the communists did the exact same thing with the publicly traded shares of countless property developers, simply saying no one is allowed to buy or sell anymore, and they just kept those rules in place forever. Theoretically, this means those share values stay where they are when they were halted, but anyone who owns those shares essentially now owns nothing, as they literally have zero liquidity. What good is $1 million if it's locked in a safe and can never be opened? How much is that pile of cash worth if it can never be spent. The truth is, it's entirely worthless. Now, China is trying to pressure investors that all is well and their market manipulation is on paper showing good results. But let's not forget that that is only after trading on the collapsing companies has been entirely stopped. So what exactly have China been doing? Well, right off the bat, they fired their top regulator from his role and they've replaced him with someone whose remit is essentially to do whatever he can to stop the bubble from popping. What followed next was essentially a machine gun firing out emails claiming every policy you can possibly imagine that might even possibly be able to help halt the stock crash. The CCP announced that they would provide funding support to property developers, basically just throwing cash at bankrupt companies that have been zombies for the last 2 years. The Chinese Sovereign Wealth Fund has pledged huge levels of support, saying that it will simply start buying up billions of dollars worth of ETFs and stocks to try and provide artificial buying pressure to stop the markets from dropping. The CCP announced that it will be helping failing companies seek mergers or acquisitions in an attempt to keep them aloft, and knowing how the communists do business, this will probably look something like pointing a gun at a successful Chinese company's CEO and telling them to buy these companies or they'll disappear into a Chinese gulag. A collection of Chinese state funds that people call the National Team has also been buying shares as quickly as they can using printed money, so far amounting to roughly $10 billion across them alone, or about 1% of the entire free float of the market, which is a monstrous amount itself, and they've said they're going to continue buying more stocks as well. Of course, China is also restricting selling as much as it can with the aforementioned halts to trading of more than 25% of the entire CSI 1000 index, but China is also penalizing its own citizens by banning lots of domestic investors from selling shares at all, meaning that only foreign investors are allowed to flee that sinking ship and domestic investors have to go down with it. Some Chinese brokers have even secretly told sources that they have been ordered by the communists to simply not fulfill sell orders at all. The Chinese government announced a further 1 trillion yuan in monetary stimulus that is going to allow Chinese banks to cut their reserve ratios to loan out more money at cheaper rates to people, because if the Chinese learned anything from 2008, they apparently think it's a good idea to inflate a debt bubble as much as possible right as it's collapsing. The market regulators in China have even announced that they will be forcing brokers to adjust their margin call levels, so they aren't allowed to margin call investors who are underwater in their positions, basically forcing these brokers to take billions in losses as they aren't allowed to ask for their money back when their clients go bankrupt. Honestly, I'd love to sit here and list every single thing the CCP has announced it's doing in an attempt to stop this market crash, but what I listed there was only what was announced over the last 2 days alone. Over the last month, China has announced more than 50 separate attempts to restore stability to the markets to stop this rout. Needless to say, things are really damn bad in China right now, even worse than they have been over the last 2 to 3 years. And honestly, this is just what needs to happen. China created the largest property bubble the world has ever seen, and it's impossible to see that bubble collapse without the Chinese economy, which was incredibly over-reliant on this property bubble, not fall as well. Anyone who's surprised by this development truly needs to consider what business communists have operating an effective free market, and why, after 3 years of repeated failures, anyone expects them to finally get things right and for every problem to disappear. On the surface, the CCP have managed to disguise the reality by showing the indexes rebounding from their freefall. But these indexes are not a true representation of market value, because it is literally impossible for millions of these shareholders to sell their stock. Every failing company has seen its trading halted, or the ones above water are allowed to trade so they can rise and give the illusion that all is going okay. Now, some star investors have been incapable of protecting themselves from this market rout as well. Over 2023, the CSI 1000 index fell by a total of 30%, but some hedge funds and top investors were able to pick their winners and still return positive figures for their investors. Gold State Capital was one of those star investors who managed to avoid the losses and focus on the winners. However, the tides have now changed, and even these winners are now suffering, and not by a small amount. Gold State has managed to return 28% over the course of 2023's disastrous year for Chinese stocks, a really solid result. But over the last month since the new year started, their fund has fallen by a massive 32% over simply 5 weeks. That erases every single gain made over the entirety of the last year and then some. And it means that if you had invested with them at the beginning of 2023 and you'd seen your portfolio go up by 28% over 2023, but you held on, you would now be down at 15% on your initial investment after that chaotic 5-week crash. A gauge that measures every single actively managed fund in China shows that on the whole, they've fallen by 16% this year so far. So needless to say, this is pretty disastrous across all investors and all asset classes. Now, as a result of all this chaos in China, we are seeing two interesting developments relevant to us in the West. The first is that Chinese citizens are seeing all this happen in real time, and they simply do not trust the Chinese property market or the Chinese stock market when it comes to investing anymore. We have now seen a total rout in domestic investing support across China, and instead, Chinese citizens are resorting to buying up gold because it's the only way to get away from the Communist Party's tentacle. The other interesting development is strangely enough regarding Trump, who while in power was notoriously anti-Chinese and put major problems on show for the Chinese economy. Now, as confidence in Biden's drops across America and no one knows who is going to be running as the Democratic candidate for the upcoming election, the markets are pricing in a Trump victory and further escalations in the US-China trade war, which investors are expecting to hurt China disproportionately. If nothing else, we really need to keep our eyes on China right now because their economy is truly huge and global, and this will have ramifications for all of us in other countries too.